On today's show, 3 questions. Number 1, why are we waiting on the Fed? Number 2, is inflation ruining our lives? And number 3, is Trump taking your credit card points away?
Consult an advisor or conduct your own due diligence when making financial decisions. General principles discussed during this program do not constitute personal advice. This program is furnished by Dentist Advisors, a registered investment advisor.
Welcome to Dentist Money's 2 cents, where we help dentists navigate all the noise. My name is Jake.
I'm Will.
And I'm Rabih.
Boom! Nailed the intro. What is up, guys?
Good job.
I almost botched it, but that was good.
There was a little pause, but we're doing okay. What is up, everyone? You got the dream team today. If you're listening to this podcast, this is the dream team. Matt is not here. He is out. I am taking over his duties. We have Will and Rabih. Super excited to be here. Any initial thoughts here, guys, before we dive in?
This is probably the first 2 cents ever without Matt, and I do not know how we feel. We're having so many problems with him not here. We just want to wish that he's doing well. You know, he's listening to our voices. If the pain meds aren't strong enough, he could listen to this and fall asleep to it.
Matt is out. Taylor's out. We have a few of us out. So we are going to be your hosts here over the next couple of weeks doing 2 cents. Again, as I said, pumped to be here. Let's just dive in, shall we? Let's start with our first question, which is why are we waiting on the Fed? Rabih, take us off here.
Why wouldn't we wait on the Fed? Everything is waiting on the Fed, you guys. I do not know. I know Jake is a big movie guy, and we were talking in the office a couple of days ago, on Wednesday, right? About all the drama and the stuff that you guys are watching. The thing I watch the most is the drama at the Federal Reserve.
Oh my gosh.
It would make a good movie. It would make for a good TV series.
You think it would? We're going to get a Jerome Powell biopic here in a couple of years or what?
Like the one they did with OJ where they had like real actors do it.
Yeah, that'd be kind of fun.
Who would play Jerome Powell? Like Denzel Washington or something cool?
How about... Oh gosh, that's a great question. I need some time to think about it. Can't come up with something right now.
I'm trying to think.
Are we on Jerome Powell's team? We're going to get into this, Rabih. There's kind of teams forming in this. Give us and the listeners the baseline story here, and then let's go from there.
All right. So on Friday night, the Federal Reserve received like a case. Like the Department of Justice is taking the Federal Reserve, the Bank of the United States, to court over a case regarding the renovation of the Federal Reserve building. So the Federal Reserve building in Washington, D.C., they're renovating that thing, and it's costing like $5 billion. And the administration really decided that this is the appropriate time to use that to launch a personal attack on Jerome Powell, who's the chair of the Federal Reserve. Obviously, Jerome Powell went on, created like a video, posted it online saying that this is the administration intervening and attacking the Fed's independence because they want us to cut interest rates, and we're trying to do what's best for the American people. Everyone made it political. It became political. Of course. Thus the drama, right? So interestingly enough, you would have thought the market would react to something like this. This is big. Every central bank around the world issued statements about this. The market opened down, and then by the end of the day, we were green as if nothing happened. They forgot about it. The case is going to go to the Supreme Court. It's a case of fraud, but it is really just because they're trying to pressure Jerome Powell into an interest rate cut decision. And if you guys know something, his term is ending this year. The May meeting will be the last meeting for Jerome Powell. And after that, he can either step down from that committee or step out of the chair position and stay as a voting member on the committee. If he stays as a voting member on the committee, no matter who the president assigns as the new Fed chair, he will not have total dominance on that committee, and they can't direct interest rate like they will and like how they would want it. So this whole fraud case, is to try to not only have him leave from the chair position in May, but also leave the committee for good in May, so they can win a seat and, get the people they want in and have lower interest rates. So it's more political. It's not really about, building. The government spends our money in all different inefficient ways. This is not the first occurrence, right?
That was one of my first things I want to talk on there is if you think your home renovation's a lot of money, check out this $5 billion building here, which is absolutely necessary. It's probably really super important that we get this done. The smartest use of $5 billion is to get some nicer couches in the Fed chair building.
Probably. I really do not know what's going on within the landscaping of the Federal Reserve. But what I know, what is going on is that this is creating some craziness and bets in the market on one, who's going to be the next chair of the Federal Reserve, and
Don't they
two,
both have the same name? What's their
yeah,
names?
there's been actually an update to the news today, so I'm adding it, and what interest rates are going to look like. So let's just take a step back. As Will, you mentioned, it is a competition between two Kevins, right? There's a Kevin
Oh, yeah.
Hassett. The first Kevin Hassett is he used to work on the administration with Bush, and he was like an economic advisor. He also worked on the campaign with shoot, I forgot his name. Who was that guy who was running on against Obama in the first term? John McCain. He was also on the economic policy team for John McCain. He's, a big part of the Republican Party, and his expertise comes from fiscal policy. He cares about proper taxes that would maximize how much revenue the government can make. Like, this is what he's known for. This is Kevin Hassett. He's currently in the administration. The other guy, his name is Kevin Warsh. And this guy right now is a professor at Stanford. But before that, between 2006 and 2011, during the Bush and the Obama administration, was member of that Federal Reserve Committee that votes on interest rates. All the way until a couple of weeks ago, Kevin Hassett, the first guy, was the favored person. And if you look at betting markets, the markets were saying they're giving him around a 70% chance he's going to be the next Federal Reserve. And then this morning, our guy, the president, they asked him an impromptu question, and he hinted that he wants Hassett to stay where he is, aka he doesn't want to add to his job description. And the betting markets completely switched in favor of the other Kevin, which is Kevin Warsh. We think the market would love Kevin Warsh more than they would love Kevin Hassett, because Kevin Warsh has done this job before, and he is less of a political figure and a one-sided guy. But they're both from the Republican Party. Don't think but one is less intense than the other. So maybe the market would take that news better. But this is where we stand. What do you guys think of this drama? Is it better than the shows you watch, Jake?
It could be. I mean, I watched some pretty good shows and some pretty good movies. I watched Inception last night. Actually, I'm trying to rewatch more films. Inception's underrated. I know it's like one of the most popular movies of the 21st century. It's still underrated. It's incredible.
Do you guys think Kevin and Kevin versus Kevin, do you think they both want the job? Like, is this something where they're
I was going to ask this.
Or
like, who wants to be the Fed chair? Why do you want to be the Fed chair? It feels like it's a thankless job. It takes a lot of work. You're blamed for a lot of stuff. Why do you want this job? Just because for the prestige of it, I'm guessing?
It is very prestigious.
Yeah. And you want to serve, quote unquote. You want to serve people and do that thing.
If you think of it, the Federal Reserve has more immediate power than a president. A Federal Reserve can go change interest rates, wreck the whole global economy. A president may have to rally people to stand behind him if he wants to wreck the whole world economy, right? So they have access to more tools, but the Federal Reserve is not one person. It is a committee of 12 people, right? And we're just voting, or you're just having drama on who's going to be leading them, who's going to be reading the press conference. This is the type of thing.
Yeah, it's cool. So, I bet Kevin versus Kevin would make for a good episode. There's probably some behind the scenes stuff going on, some lobbying,
a lot of lobbying,
a little political drama. You got to love it. I think
I would love to see a TV show about it.
Yeah, it'd be good.
I have two comments. One is, every time we just bring up these betting markets, like I think it's crazy that we've gotten to this point as a society where we can bet on who's going to be the Fed chair, right? Like on Kalshi or Polymarket, right? All these other sites. I'm curious to see the sweeping implications of that, especially as we're getting into politics. Betting on things like this is pretty interesting to me in a sad way. The other thing, what was I just lost my train of thought that I wanted to bring up was the stock market. Like you mentioned, Rabih, it hasn't really, like, this whole drama has not impacted the stock market. It feels like nothing can these days. It's like the stock market's like the past couple of months is just kind of slowly creeping upward, really strong. That's also interesting to me. I don't know what that means. If this is like, we think this is somewhat inconsequential, the market's just waiting to react until we actually get a new person in, or if this resolves. Usually, so I feel like if the market's in a bad spot, or like in a spot of unease, right? If investors are uneasy, and if something negative, like this drama in this case happens, I feel like that can send the market in a bit of a downward spiral, right? It gets scared. You can like spook the market. It seems like the market right now is not spookable. Is that a word?
Yeah.
It's like it's kind of strong enough that it doesn't really care about this little kerfuffle happening over here.
Also, we're still in like season 1. This thing won't happen until May. If they're gonna start getting worried now, that's a really long time. But if June shows up and we're still not sure who's the Fed chair is going to be, and I don't know, the administration says, oh, maybe we don't need a Federal Reserve, then yeah, you will see the market freaking out. But right now, the market is only pricing in what has been officially communicated about interest rates, and it's working its way based on that. So if we look at these, communication, how they're reflected into the futures for the Fed fund rate, how much we think interest rate is going to be at, etc. It is very interesting that if you look at the probabilities, the Fed is going to be meeting 3 more times on Jerome Powell, watch. They're going to meet on January 28th. So in like 2 weeks from now, the expectation right now is that there's only a 5% chance that they're going to be cutting interest rates. They won't cut interest rates. They won't meet in February. They'll meet on March 18th. The probability of an interest rate cut is only 21%. And then in April, the probability of a rate cut is 35%. So a no cut is 65%. If you think of just like who is higher, the probability that we will not have any cuts from now until Jerome Powell leaves is higher than 50%. The market does not think Jerome Powell is going to cut interest rates, maybe one. That's why they're giving a 35% chance. That's about it. However, what is very interesting in how the market is pricing stuff is that if you jump one more meeting further for the June 17 meeting, which is going to be the first meeting with the new Fed chair, whichever version of Kevin we're going to be having, it is giving a probability of 61% in favor of a cut. And that's not only like a 25% basis point cut, 25 basis point cuts. It could be 50, it could be 75, right? There are so many different expectations on how aggressive the new Fed regime is going to be. So the summary of all of this drama is that probably for the next 3 months, not much. Then in Q2 of this year or Q3 of this year, when we have a new Federal Reserve, we're going to be having, a lot of attention being brought on interest rates. The talk about people refinancing because interest rates are lower. The talk about, will the stock market go into a bubble because interest rates are lower? Will we have inflation because interest rates are lower? All of that will be on the table. So now we kind of know. We do not know how the market's going to react, but we know what noise is going to show up in the next couple of months.
Okay.
Love it.
Very good. Anything to add there, Will?
Stay tuned. It's going to be like, you think it's bad waiting a week for an episode to come out. We got to wait like months for this to play out. So,
or really just Rabih. I mean, what percentage of our listeners do you think are actually like, man, I can't wait to see what happens with the Fed chair here?
Just me, and you guys are along for the ride.
There we go. And then now that they're listening, they're tuned in, and maybe they'll be.
Yeah, I like it. Yeah, that's good. I like it.
Very good. Okay, well, let's move on to our second question here. This actually ties in a bit, Rabih. These kind of correlate and go together. I want to talk about inflation. The question that I posed to us at the outset is inflation ruining our lives? You think it is, Will?
I mean, I think everything, yeah, maybe.
Yes, okay.
Yeah.
Rabih, is inflation crushing us?
It's not crushing us, but honestly, I can't keep up with adjusting prices in my mind,
Yeah.
And it's disappointing every single time I look at my shopping cart and it's much higher than I thought it was.
It is kind of freaky, I was thinking about inflation is like projecting it to the future, Rabih, like you just said, or if I'm doing it in my mind, I'm like, okay, this is what things cost 5 years ago. Like, what are things going to cost in 5 and 10 years, right? Like, it's weird to think that a starter home would cost $1 million or that like my cheeseburger is going to be $15, right? Like, those just numbers seem strange in my brain, but it's likely that's going to happen, right?
Given think of if you told somebody you told somebody in the 70s or 80s what things cost today, like they would be like, you're insane. And it just feels normal to us now, which is why, like, I mean, even anchoring back to like, oh, wow, they live in $1 million house like that. When you're a kid, you're like, wow, if you have $1 million house, you've made it. Like, that's the dream. And now it's like basically one step up from a starter home.
Yeah, I guess we all of us just anchor to what prices were in our early 20s, kind of like as we start like moving into a career, we all just anchor to that's what prices should be forever.
I think so, but it's so gradual too, where it's like we have this like software that runs future projections, and it basically shows how much money you're going to have when you die if you like do all these things, right? and you can toggle between future value and present value, and it's pretty crazy. I think the future value just builds in like what the value of a dollar today is going to be in the future. And some of these projections are showing like what, 30, $40 million as future value, but it's really like 6-7 million in today's dollars. And it's just interesting to think like you could have a $30 million retirement portfolio, but it's going to feel like a $6 million retirement portfolio.
Yeah. Which is just weird to think about.
It's
Economists are
very
going to hate
weird.
me for saying this. I think we should get to a point where we're like, we need to divide everything by 10. You know, it's like once everything costs $10, let's just say it costs $1 and let's just move everything back just to keep the numbers smaller.
Divide your income by 10.
Yeah, it's like, let's just take it all back like by a 0, right? Like, let's move the decimal point. Anyway, sorry, that's the tangent here. I have a survey for you guys. So Gallup is the company. They do a survey every year where they ask Americans, like, what's the biggest financial problem to you? Like, what are you most worried about? It is inflation, you know, which is pretty obvious. It has been inflation for the past 4 years, so since 2022. And it's inflation by a wide margin. Like it is inflation 30-40%, and the next item, which is like low wages, is like 10%. Right? It's like it is inflation by a mile.
People's biggest concern. I think both those go hand in hand, right? Like you hear dentists say all the time, like, well, all my staffing costs have gone up and all my costs of supplies have gone up and my collections haven't really kept up with it. So it's like, yeah, things are getting more expensive, but yet I don't really feel my income, low wages, whatever. Like I don't feel like my income is keeping up with the rising costs and everything.
Let's get to that. Let's look at some data with that because that's perfect, Will. One quick thing before we get into that. I think this inflation deal. So right now, inflation in America is about 2.7%, right? Is what we're looking at as the latest number that we have. Now, inflation rate, I think, is sometimes hard for us to wrap our minds around, where we will say all the time, well, inflation has cooled down. Inflation has lowered a little bit. And I think people naturally think, well, no, it hasn't. Like the prices haven't gone back down to what they were before. And that's not what inflation rate measures, right? Inflation rate measures the rate of change of how prices are growing. And so when we say the inflation rate comes down to 2.7%, we're not saying your prices have gone backwards at all. It's just saying they're not growing by as much, right? Is kind of the distinction that needs to be made there. In 2022, we hit about a 9% inflation rate. Kind of 2022 was the peak of this, where it got really high. What's interesting about 2022 is it is the first time in American history that inflation went above 5% without leading to a recession. The first time ever. I think this is part of our problems that we're getting into. We're saying, okay, 2022 inflation was really high. Inflation has cooled back down to normal levels. You know, it's at 2.7% now. Historically, it ranges between 2 to 3%. It's kind of a normal inflation rate. So it's come back down and everyone's like, oh, inflation rates come back down. But without the recession to like really reel back prices, things have just like that 9% rate is still just high. Like we had that big boost and then prices have stayed high. We haven't had the recession, which is kind of funny because usually no one wants a recession and it's like a good thing not to have one. But because we didn't get one, we're kind of stuck in this higher prices place right now, which I think is interesting. Going to Will's point here, I have some data on wages compared to inflation. And this is why I wanted to get to, like, is inflation ruining our lives or not? So we've had a lot of inflation in the 2020s, like all in, we mentioned the 9% in 2022. For this whole decade, we're sitting at about 4% annually, right? We're averaging it out where the inflation rate has been. I think another reason why inflation has felt really high is, did you know during the 2010s, the average annual inflation rate was 1.8%? So like which is the lowest decade in our recorded, since 1920, right? Like inflation. So we're coming off 1.8% in the 2010s, which is essentially nothing. And I think a whole decade of not seeing rising costs and then all of a sudden getting a big boost here in the early 2020s, that hasn't felt great. I think that is a part of this scenario, right? Where we kind of got used to a decade of prices don't really go up that much.
Yeah.
And we forgot because like the 1970s, we had 7% inflation rate. 1980s was 5%, right? Like there's been decades with high inflation. Just 2010s was not. Anyway, I'm going off on a lot of tangents here. Hopefully people are sticking with me. So back to wages and inflation. So we've had, again, 4% or so has been the average annual inflation rate. If we go back to 2019, on average, like average wage growth has been 15% higher than inflation since 2019. I kind of wanted to let that settle there for people who are like, oh man, like I feel like my dollar's not going as far. On average, right, in aggregate, wage growth has been 15% higher than the rate of inflation. Now we can get into all the nuance of this here where like prices increase at different paces in different segments of, housing or different things that you're buying have risen in price versus not. And it's also like, people say, well, my wages haven't grown a ton since 2019. Well, if that's the case, your buddies did. type of thing. That's how this aggregate data works. It's like some people don't have wage growth, other people do. In aggregate, total wages have outpaced inflation by about 15%.
That's interesting. Yeah, that's interesting. I mean, I can see it. I just wonder if I wonder if dentistry is different than other people. Do you think it is? Like,
Sure.
dentists are, for any dentist who takes insurance, their collections are basically predicated on what the insurance is willing to reimburse for the procedure. So
Yeah.
I think that's the complaint for a lot of people that I hear is like,
Great point.
I'm getting reimbursed the same amount of money for this procedure. All my costs have gone up because insurance isn't just like, oh yeah, we're going to give you guys a bump for inflation. That sounds good to us. Like they're just going to try to keep their reimbursements the same if they can, right? And I'm sure it goes up, like you can renegotiate rates and all that stuff, but that's why I think dentists have been feeling the squeeze. This is obviously a dentist money show. So
yes,
I just wonder if it is, you're right. Like maybe other people's wages have gone up, but I think, to our client base, it's an interesting topic.
I'm glad you brought that up. Yeah, I've seen just even the past couple of years anecdotally, it doesn't seem like collections have really taken off, right? Revenue and practices from like 24 to 25, but for sure costs and payroll and things have gone up. And so, yeah, I can see and feel that pinch there. Rabih, any thoughts about this before I move on to
No,
my next
I
thing?
loved it. And you mentioned something that this is the first time we do not have a recession. And now it's more of like, would you rather have a period of inflation and then a recession where you could lose your job but prices do not move? Or would you rather have inflation, keep your job, but you'll have a slow bleed of stuff slightly getting expensive every couple of years? Which one did you want to deal with, right? This is the first time we experienced the
What do you
latter.
think most people want? What do you think, Rabih? Like, what do you think?
Their jobs.
No, I would want to keep my job because on paper, you are still better off. So this is the lesser of two evils.
Yeah.
I think that's an awesome point. Yeah, this is what I think about sometimes when I know we all hate higher prices. That's just ingrained in who we are as humans. I hate them as well. It's just not fun. But still, like when I go to the movie theater, it's packed. And popcorn costs $1 billion now, right? They ask for your firstborn child as like the price now for a bucket of popcorn. But people still pay it. They're like, yeah, here, take my kid. I want the popcorn. And like those are full. Like you go to sporting events that are packed. It's like people are still spending. And like we're just coming off like our Black Friday was like the biggest Black Friday ever. And holiday shopping breaking records despite all of these high prices that people are complaining about. And I think a big part of that is because no one's really lost their job. Unemployment's low. Wages have grown with that. It's just one of those things where we're seeing higher prices, but in the aggregate, wages have grown to keep up, and so people are still buying stuff, right? Weird.
The show goes on.
This is because they did not lose their jobs.
Well, maybe.
Yeah.
Yes,
Because
which
they
I
didn't
think
lose
is
their job.
fine.
They're gonna keep
Like I think
spending.
that's okay. Yeah. Would you rather have a $20,000 increase in pay, but inflation goes up by a ton, or have like no increase in pay, but prices stay the same? What feels better?
Say that again?
Is it
Would
the
you rather
same?
have your wage stay the same? Yeah, it is the same. The net effect is the same, but I'm asking what feels better. Would you rather have no increase in wage growth and prices stay the same, or would you rather make more money but have the things that you're buying cost more to kind of compensate for that? What feels better?
Personally, it shouldn't matter, but at the economic level, it should, because if prices do not increase, people aren't incentivized to make more money, and you need the money revolving. That example is a very static view. But if you think of it, that money needs to keep circulating for everyone to do well, you would want prices to be increasing. So everyone is incentivized to keep circulating that money around. This is, you're going to get the spreadsheet answer with me. I'm sorry.
I think it's the opposite.
This is how I think of it.
My opinion is it's the opposite, because I think when we make more money in our careers, we feel like we should be getting ahead. Where it's like, man, I look at my income today compared to 2 years ago. Like I feel like I should be making progress, but when I go to the grocery store, it doesn't feel like that, right? Like I don't have any extra money because prices have gone up. And I think that feels worse than being like, my budget has stayed the same. I haven't made as much money. I just think people feel like they should be making progress and they're not. And that hurts worse, is my opinion on the personal side. Anyway, okay, we'll move on here. Will, let's go to your question, which is Trump coming for our credit card points or what?
We'll see. He's coming for it, kind of. He posted on Truth Social
Love a good Truth Social post. Yeah.
Just, firing off on January 9th at 6:10 p.m. Wonder what he's up to. Just like, I'm going to fire this thing off.
Yeah. Do you think, do we know this? Does Trump have someone who runs his social media, or is he typing on his little iPhone this tweet at 6:10 in the evening?
If I'm guessing, I think he's just firing off tweets from
There's
his
no
phone.
way. Someone has to do it. There's no way.
It sounds like him, so they're mimicking his voice perfectly.
Okay, read the tweet.
Please be informed that we will no longer let the American public be, in quotes, ripped off by credit card companies that are charging interest rates of 20 to 30% and even more, which festered unimportantly during, with sleepy Joe Biden administration. And then in all caps, affordability. Effective January 20th, 2026, I, as President of the United States, am calling for a 1-year cap on credit card interest rates of 10%. Coincidentally, the January 20th date will coincide with the 1-year anniversary of the historic and very successful Trump administration. Make America great again, Donald J. Trump. So, I mean, it's a fascinating thing that he's just firing that off at 6 p.m. on a January 9th. And so he basically is saying that he's going to try to put legislation in place to cap credit card interest rates at 10%. Right now, they're above 20, sometimes 30%. For those that aren't able to pay their credit card back, they're getting just
most cards are around 25 to 30%. I'd say that's pretty normal. 25 to 30. Yeah.
So it's kind of like caught some people off guard. I saw it on Twitter where there were all these posts like, "Go redeem all your credit card points now," and like make sure you have the highest credit limit possible as they'll give you, and all these things. Because this would in theory, it's a good idea.
Yeah, make that connection for us, because he's talking about reducing the interest rate, but we're talking about rewards. How do those things come together?
Well, I mean, how do credit card companies make money?
By charging interest.
Yeah.
And probably transaction fees, right?
Annual fees, transaction fees, and charging interest. And most people don't ever get charged interest, but there's a small subset of people who pay a lot of interest on these credit cards and end up having to, that's a big chunk of these credit card companies' revenue streams. If you are think if you gave someone a loan at 25%, and then all of a sudden you're just forced by the president to cut it to 10%, it's going to cut a big chunk of that money out. And if credit card company revenue streams go down, then they're less incentivized to give people credit cards. Like, first and foremost, I think it'd be harder to get a credit card. Like, they're going to stop approving lower credit quality consumers. They're just gonna be like, well, if you're not going to pay it back, we're not going to make the higher interest. It's a little predatory, because right now anyone can get a credit card, and I mean, in a way, they're like, it's okay if you don't pay it back because then you owe us interest.
Well,
right?
That's the key point that I want to make is the reason these credit card companies charge 25 to 30% on their interest rates is not just because they're terrible people and they want to hurt the little guy, right? That's not their business model. Like, they write in there, like, we just want to hurt people.
Right.
The reason they charge the 25 to 30% is because if you rack up some credit card debt, it is very hard to get that back. For people who do rack this up and are charging interest, there's little recourse they can take to get you to pay. And there's a lot of people who default on that or file for bankruptcy, and they are never recouping those funds, these credit card companies. So they have to charge the 25 to 30% on the people who do pay it back to make their money, like for all the people that are defaulting, right? This is why, you can get a 5% loan for your house, because if you don't make your payments, the bank's just going to take your house, right? It's collateral debt that they can just take. Credit card debt that has no collateral attached to it, so they have to charge these high rates to have some margin in their business.
So anyways, that's it. I mean, you reduce the top line revenue of any company, and they're going to squeeze the bottom line revenue. Right now, like the credit card points, somebody's got to pay for the stuff that you're redeeming with credit card points, and credit card companies are paying those. So, I think that it would lead to, number one, less credit, number two, harder to get credit cards, number three, maybe your credit card points don't go as far anymore, or there are not as many sign-on bonuses and all those things. What do you think?
I agree. Yeah, Rabih, any thoughts here?
Yeah, I'm
hesitant.
Many thoughts. One on the credit card business. Like, these banks, like Visa and MasterCard and all the banks that are working with them, they are competing with each other. So it's not like they're colluding and they decided to charge 30% for people.
Mm-hmm.
People are risky investments. Lending to the government is a secure, is safer than lending to a business, which is safer than lending to an organization, which is safer than lending to a human. A human is a very risky asset. And to reflect that riskiness, you increase the interest rate. And they compete with each other to try to offer the least amount of interest rate per the amount of risk that, each case represents. That's why people have credit scores, because some people are riskier than others, right? But beyond all of that, if you take a step back, it seems from the commentary that changing lending laws is not in the scope of the president. It has to pass through Congress. So this means that this is nothing but a political move, and it will not reach an economic reality. So I would disregard it from the start. Enjoy the tweet, but that's about it. It ends
I know.
there.
I just wonder why he fires off the tweet. Like he's just trying to put people on notice.
You could say that about 75%
Well, elections are coming
of
in
the things that
November,
come out of
guys.
Trump's mouth.
So, right?
Yeah. From someone who responsibly uses credit cards, from my personal, if we're just playing this out, nothing's going to happen, right? Like you can bookmark this credit card. This is like nothing's going to come from this if you're listening to this. But if they did go this route, I am against it because as someone who responsibly uses a credit card and pays it off every single month, I like my credit card points. I like flying for free on occasion. It's nice. So I'm fine with the 25% interest rate if you give me my 1% discount on the things that I buy.
Yeah. Devil's advocate. Do you think lowering, I mean, this is just purely hypothetical. Do you think if they lowered credit card interest rates that more people would pay their credit card debt back?
No, they will borrow more.
Yeah. Do you think that people, like, it doesn't incentivize people to be like, oh, I'm not as in trouble as much, I'll pay it back? Yeah.
No, your minimum
That's
payment
just
will
people
drop.
are who they are.
Your minimum payment will drop, and you'll be like, but I could afford a bigger minimum payment, so let me take on more debt.
Yeah. Oh, my interest payment this month is $40 instead of $120.
Go get some more.
That's fine. I'll just keep that there.
And I think maybe there's a reason to have those high interest rates.
And I just think that people who are racking up a ton of credit card debt and can't pay it back, it's like those people are never paying it back no matter what. And so, yeah, which is a good point. I'm glad you brought that up. I really don't think it's changing behavior at all.
Yeah.
But it would hurt my airline miles, which I don't want. Okay, very good, gentlemen. We made it through our questions. Anything else we want to hit on before we bolt here? Any other thoughts?
I think if you listen this far, that probably means you listen to most 2 Cents podcast episodes. I think we need to hold some people accountable for some predictions that were made.
Yeah.
Namely Matt Mulcock. If you're listening to this, you predicted the Philadelphia Eagles to win the Super Bowl.
Did he this year?
Oh, yeah, like 4 episodes ago.
No way.
Yeah.
That's bad, Matt.
Yeah.
If you're listening, Matt, that's tough luck there.
I thought he said he wasn't ready to make the call. We can go back. We have the dates,
he officially went on. You were there, Rabih. He officially went on record. He said that he said the Eagles are winning the Super Bowl. So I think we just need to kind of hold him accountable.
I love that. We needed to bring that up. We should have had that on the agenda. Thanks for bringing that up. Speaking of, there are NFL playoffs this weekend. Again, if you've listened this far, you can just leave. This is for our own benefit here at this point. Let's get some predictions for the divisional round here. I will tell you what I'm thinking just because I want to, and this is a podcast and I can talk and you can't do anything about it.
We gave Jake the microphone and here we go.
They knew.
Yes, they knew. No, first game, the Texans are going to beat the Pats. Mark it down.
Okay.
That's happening there. What's our next game? Seahawks, Rams? No, yeah. Seahawks, Niners.
Well, AFC's Bills, Broncos.
Okay, let's do Bills, Broncos. Broncos are winning. Josh Allen, you're awesome.
I think it's Bills.
You're really cool. You have a nice girlfriend. Sinners was the best movie of the year last year. You're losing to the Broncos because they're going to beat you up because they have an awesome defense. Okay, 49ers versus the Seahawks. Upset. 49ers. Keep it going. No George Kittle. No problem. Brock Purdy's kind of a dog. And Christian McCaffrey may be the best player in the NFL. They're going to keep it rolling. Sorry, okay. Sam Darnold, a little bit hurt. He's out. What's the last one?
Bears, baby. Come on.
Oh, Bears are my I don't have an NFL team, okay? Bears are kind of my pseudo NFL team. I'm all in on Ben Johnson. I'm all in on Caleb Williams. Let's go Bears. For Becky and Studi and everyone listening to this, I hope your Bears do it. They are going to do it. The Bears, baby. Let's go this weekend. Anything to add there, Will?
Good. I like it.
Okay, last point. This actually is important. We do need to promote Launchpad, okay, after this thing that's coming up.
Michelle's going to have a fun time cutting this.
She's not cutting. Michelle, do not cut the NFL. People need it in there. Just as important as the Fed chair, what's going to happen there is we need the NFL predictions. Dentist Money Launchpad. This is a series of live courses, right, built exclusively for dentists, D4s and people graduating. We're trying to help you get kickstarted on your money journey. It is starting February 6th. Please, if you're interested, if you have associates who are interested, know people in your life, go to dentistadvisors.com /launchpad. Go get registered. It's a really awesome program.
I think it's cool. I mean, like any D4s or students or even, new grads that are listening to this, I've always said this. I wish there was more financial literacy and education, like in our youth, right? Like there's we'll learn about history and I don't know, take PE classes. Like you should have seen my senior year schedule. It was a joke, but like there wasn't a single here's what a mortgage or a tax return or an investment account is. I was doing like food classes and basketball classes. And so I just think like there needs to be more financial literacy, and that's what we're bringing with Launchpad, a little more financial literacy to the people. So
it's going to be fun. It's really cool. Please go check it out. Okay, Will, Rabih, thank you guys so much. Have an awesome weekend. That's our 2 cents. We'll talk to you later. See ya.